Well, let's talk about inflation nation. 3-decade high, 3.4% inflation. And I was pulling it apart. What was it, 1991 coming out of the last recession is 5.4. So proportionality, it's big, but it's not as big as it has been historically. Now, I as well did a little reading. I saw that really it's driven by three factors, food, gas, and accommodations. There's actually some things that went the other way. Apparel actually went the other way. Now that
Yep.
comes as no surprise to you. I mean, talk about you. You wrote the report. The food price report that we talked about in our
It's
episodes.
getting closer to our target. Yeah.
It's getting closer. Like when you slice the data, what was the food inflation number? And I had to laugh because you had the little meme of the rocket taking off in your Twitter. It just made me laugh. But are you concerned? I think it was like 6.1, 6.6
6.5.
6.5% in the month of January. Based on our conversations previously, are you concerned that it's not 6.5? It's more like 10.5 because they may or may not be tracking it in the way that you would think. Or do you think they're kind of close to hitting on the nose at 6%?
They're getting closer. I don't think they're there yet. But funny enough, Michael, I've been talking to some colleagues at the University of South Florida, and they too believe that that America is not reading inflation correctly as well.
Common issue.
So and they came in this week at 7.4% for food. Yeah. And when you look historically over the last 30 years, typically Canada catches up to America. So I hate to be the bearer of bad news, but this is just the start. We are looking at a very expensive 2022, unfortunately. So for consumers, bad news for sure.
Yep.
But what we often don't talk about in the media is how inflation will impact supply chain relationships. You know this, Michael. I mean, as soon as, let's say you're a processor and you have to charge more, you have to pass on extra costs to your customer, like Walmart, Costco, Loblaw, Sobeys, Metro. There's a lot of pushing and shoving. Not all retailers are willing to take on more costs and increase prices at retail. They want to make sure that things remain under control. And so in some parts of the world right now, you're seeing processors boycotting retailers because they can't really increase prices. And we're talking CPG companies here.
Yeah.
So I'm wondering, and we're starting to see that in America right here in the United States. So I'm wondering how this high inflation rate will impact because we don't have a code, and we've talked about the code, and still we're expecting something in April of this year. I'm just wondering how it will impact relationships between processors and retailers right now. Are you hearing anything on your end, Michael?
Yeah, I mean, I talked to one retailer who basically said over the fullness of time, everybody's going to have to take some pain in this. The consumer,
Exactly.
the consumer, the vendor, and the retailer. But at the end of the day, the retailer stands between the CPG companies and the consumer. And then the retailer is saying, you're not passing price increases to me. I'm going to go to somebody who wasn't. I mean, it is a classic back and forth negotiation and time immemorial. It will continue. The food processors say, listen, I need to up your rate. And then grocers say, too bad, I'm not taking the price increase. I'll go, so it is this is a big business, a $200 billion business. So it's very, very complex. I think we'll see again in the fullness of time. What's interesting to me, and I spend some time also, I brief the Bank of Canada quarterly on the retail industry as part of my advisory practice. And we've been talking about things like, well, is there enough momentum in the economy to overcome the inflation? And you look at America, for example, they released numbers today in retail sales, which includes food. They had close to 4% growth. The sales keep coming. And what encourages me about getting through this, and not for everyone, is, Royal Bank of Canada put out a report. There's 100 billion with a B of incremental savings in Canadians' bank accounts. 100 billion. That's dry.
That's a lot of money
for the economy. And they say that's incremental. Now, some way find its way, we imagine, as things open up into services and travel and everybody wants to travel. But also some finds its way into, listen, I can take the hit on the price because I've got this pent up or saved up. The economy, in other words, at the macro level can absorb some inflation. In other words, we'll see how much it can absorb. I mean, that's ultimately, the final question. So that's why we're not seeing the banks on either side of the border really race to increase the interest rates, is they think they'll raise it very proportionally, but even when they raise it, it's only going to be a couple of percent, like we're at.
Exactly.
So I'm no
Yeah.
economist. I play one on a podcast, but
Yeah, and
there
and
you
and
go.
what's helping us is a strong dollar. I mean, the Canadian dollar has been a non-story for almost, I guess, a year and a half now,
And
which is
it's fit. And the other point is, gas prices are very high, like record high. But in Canada, that's a natural hedge. When Ontario people are paying high for gas, it means people in Alberta, the industry is doing well. Like
is doing well. Yeah,
there's a natural balance there, right? So, the West, Calgary, Edmonton, these cities have been very challenged by a very low price of oil. When that goes up, more money in the tank, more disposable income going to drive your car. But the
yeah.
economy over the long term in Canada actually benefits when you do the big math, right?
For consumers, there's again a bit of a perfect economic storm,
Yeah.
unfortunately for them. Energy costs are higher, lodging costs are going up, and food as well. And as I said earlier, I don't see how our food inflation rate will drop anytime soon. And we did predict that it would reach about 7% for 2022, and that's basically what is happening right now.
Right.
Yeah.
All right. Well, that's a great start to the episode. Let's
Oh,
jump
by the way,
now.
Michael,
Yeah.
do you know
Yeah.
which item has gone up the most in January based on Statistics Canada's numbers?
Well, based on your Twitter feed and the poll you put out, I would have to say one part of the trifecta, chicken. Am I right?
That's right. Yeah,
Oh, there you
absolutely.
go.
Now,
All right.
here's the thing about chicken in particular.
Mm,
If you'll go back 11 years or 10 years, chicken has gone up about 11%. But prices have dropped over 10 years.
mm.
Now they're up, chicken prices are up 12% since last year. So you can see that really the last 12 months have been quite volatile at the grocery store.
Okay,
And so,
question for you on that. So, I've been buying. Generally, I try to buy only organic chicken that I know is kind of raised properly. Let's
yeah.
just say, which of course I'm fortunate I can absorb that higher cost versus the cheap chicken, that you can get as a protein. Do you think
Yeah.
Do you think more people buying organic chicken, higher value added chicken, let's call it, is affecting that, or is it just an overall raising of the price? You think there's anything going
No,
on?
I mean chicken. Unlike dairy, chicken farmers, I mean, will go to the board and basically readjust prices based on the cost of production, essentially, and they do that regularly. Dairy will do it once a year,
Mm,
and that's why we're seeing dairy price. I'm expecting butter was up 5% in January, and that
mm,
was before the increase of February 1st.
mm,
So I think dairy is going to be a big problem with the next little while. But for poultry, I think they do a good job incrementally increasing prices so they don't shock consumers.
mm.
Now, obviously, 2020 was a different year for
Yeah,
animal proteins in general, but chicken is a steady as she goes commodity. I mean, typically eggs is also supply managed, same thing.
yeah, yeah.
And we had Mary on our podcast last year talking about eggs, and
From
so
Burnbury
very
eggs,
predict.
yeah, from
Yeah,
Burnbury, yeah.
exactly. And so they're pretty. It's a good, well organized industry. I don't know if you knew this, Michael, but there was the avian flu hit the poultry industry in Nova Scotia
Oh, I saw that,
last
yeah,
week. Yeah,
yeah,
it was. It didn't make national news, and that's a good thing because
yeah.
the avian flu is our chicken farmers' worst nightmare. I mean, it could spread very easily, could become a problem for the entire industry. But they were able to contain. The farmer was very responsible. Called the CFI right away. CFI actually
Good biosecurity, right? They've got good biosecurity practices in place, yeah.
so they had to call about, I believe, 12,000 chickens, which is actually not a whole lot. So the industry is very well organized, has learned from past mistakes, and it's doing very well. Because if you call like Abbotsford back in 2001 was a disaster. We had to call millions of chickens, which ended up costing a lot for the industry and, of course, consumers in the end. But this time around, well organized, well contained, well managed.
All right.